Okay, well, I'd like to welcome everyone here today to Blockchain Ireland's Real Estate Tokenization event in association with Black Manta. I think we have a fantastic panel here. And I'd like to say thank you to, in particular, Marjana, Dara and Dave and all the ICT Ireland and many other people who worked very hard to get Blockchain Ireland week and this event together. So much appreciated. How we plan to do this today, I think that property tokenization or real estate tokenization is one of the hottest topics in the whole tokenization world. What we plan to do today is we plan to have 3 presentations. Interspersed in between those, we will have fireside chats. What we're speaking about is much spoken about in the digital asset media, but very few deals have actually been done. So we have people here who have been involved in some of the first deals and have been involved in actual executions of deals. So hopefully it'll be a very interesting panel. I live in the digital assets bubble, so I make many assumptions about things that maybe the audience here do not have the same assumptions. So I very much welcome, and we all very much welcome, audience participation. All your questions and any other contributions that you have are much appreciated. So, so I'd like to kind of get going and say that, if we look at what we're talking about, right? We're talking about what CashLink would say is digitizing a liquid asset, or what the European Commission would say. They have a few more words, give me a moment. It says DLT can enable users to tokenize tokenized tangible assets, cars and real estate, and intangible assets like data and software, thus improving the liquidity and tradability of such assets. Tokeny would say that tokenization real estate helps issuers to better manage and enforce compliance and be more cost effective, while for investors it brings a cost effective way to own digital shares, transferable 24/7 with rapid settlement. So if we look at the whole scheme of asset tokenization, property, along with 1 or 2 other sectors, seems to be the accepted one as one of the first that will be disrupted by the use of digital assets. So we have a focus today on these assets, these property assets, but also ones that are regulated. We're not looking at Bitcoin or other unregulated assets today. We're looking at assets that are in the regulated space already. Andrew will touch on Micah later, but for the most part today, we're going to stay in the regulated sector. So we're going to start with intros so you know who we all are. I can start off with myself and we'll end up with Mahesh, and Mahesh will then proceed into the first presentation. So I'm Brian Elders. I'm a partner in Black Manta, which you can see here. Black Manta, Alex can tell you a little bit more about, but it's the first broker regulated in the European Union for digital securities. I'm also the founder of Source Digital Assets, which operates in Ireland and Hong Kong. We help companies to tokenize many different types of assets, and we helped in the formation, the bringing to market, and the trading of such assets. We also have a new custodian here in Ireland called Fortuna Digital Security, Digital Custody, which will be launching very soon. And we're involved in many different projects across the different companies that we're in. So we have a very interesting view of what is a rapidly exploding and expanding digital asset sector. So maybe I'll hand over to Alex from here.
Thank you very much, Brian. My name is Alexander. I'm co-founder and managing partner at Black Manta Capital Partners. As Brian already said, we are a tokenization as a service provider and a one-stop shop for issuers as well as investors. What do I mean? We provide structuring services for issuers. It can be a debt token, can be an equity structure, tokenized participation rights, or real equity in form of ownership, or a debt structure like a tokenized bond. So we are very flexible on the structuring side. With our partners, we also provide the whole technical infrastructure related to a security token offering, reaches from KYC and AML, which might be different to investors targeted or the jurisdiction tokens shall be offered in. Then to the core tokenization engine, where we are also blockchain agnostic and working with different tech providers in the background. And as Brian also said, we are a regulated financial service institute, licensed by the German regulator BaFin and notified to all 27 European member states. So we are entitled to provide broker-dealer services in the European Union. This in order to operate and to have our multi-asset, multi-industry, and multi-STO platform, meaning within our framework, we have multiple issuers and in different industries offering their security tokens. Real estate tokenization was actually the first use case and first project we executed together with Peter Augustin, who is also on the panel today, who was the first issuer with us. And we realized a security token offering of a commercial residential real estate in Berlin. We'll talk more about this a bit later today. And in general, we saw that the use case of real estate tokenization was, in particular at the beginning of the whole tokenization ecosystem, the most promising one.
Maybe it's a good way to hand over to Peter to introduce himself quickly.
Yes, hello. My name is Peter. I'm an entrepreneur as a myself. I started an internet service provider in 1996. We sold the company in 2006 for almost 100 million euros to Liberty Global. It's another American cable provider. And afterwards, I turned to startups and real estate. And that's where things collided, because the real estate business is really old. You know, it's really old-fashioned business. And on the other side, there are lots of startups outside which do great innovations. And one of my thinking was how to get rid of all these notaries and papers and everything and banks, just for doing a real estate investment. And this was when the security tokens came along. I thought this would be the future, because you can tokenize it in really small fractions. You can do the whole thing without any notary or banks. It's a very interesting concept. And then afterwards, the token holders own their own tokens, so they're not somewhere written on a paper, and you have to hope that it won't get lost or something like that. But you have ownership of your tokens. So I thought this would be a great thing, and so we did the first real estate security token offering. I think it was 1 year ago, with Alexander. And it was, I think it was a great success, and there's a second one coming later this year for another property in Berlin. So looking forward to do it.
Fantastic. Maybe I'll turn over to Andrew, who's the legal brains in our team today.
Thank you, Brian. Yeah, the resident lawyer. My name is Andrew Tzialli. I'm a partner at Philip Lee. I work in the corporate M&A venture capital team. As is often the way for venture capital lawyers, back from about 2012, 2013, started having a lot of exposure to disruptive technologies. Venture capital funds and individuals are often interested in things that are new and innovative. So 2014, I think it was, we started doing work and initially advising businesses involved in crypto and blockchain. People think that the sector is often referred to sometimes as the Wild West. It really was back then. I mean, it almost seems reserved and calm now in comparison. 2015, 2016, we started advising on some of the early ICOs, exchanges that were looking to establish themselves in London. And then 2018, I left my firm in London and joined Philip Lee in Dublin. I still split my time, or at least I did pre the COVID world, between Dublin and London. I still head up our London office from Dublin now, and advise on English law and Irish law. And we now are seeing huge amounts of inquiries for legal assistance in and around the blockchain space and particularly tokenization.
Very good, thank you. And Pete, just before we get to Mahesh, let us know about you.
Absolutely. So I'm Pete Townsend. I'm the founding partner of Norio Ventures, based here in Dublin, in Ireland. I'm a startup advisor, investor, mentor, also non-executive director to Coinbase here in Ireland, and advisor to Fund Admin Chain in London, as well as a number of other businesses in the fintech and digital asset space. Also podcast co-host of Money Never Sleeps. It's a weekly podcast where we get inside the minds of entrepreneurs and also look at the crossover of startups, enterprise, finance, technology, and life as we know it. Along with Owen Fitzgerald, my podcast co-host, he's a senior development advisor to Enterprise Ireland. So we end up talking a lot about the whole digital asset space, just because of my love and passion for this space, which really harks back to my long career in the financial services, just seeing how inefficient the whole space is. And we'll talk more about that a little bit later. My main activity over the last year with Norio Ventures has been getting startups into fighting shape for funding, take them through a 10-week program to get them from just how to talk concisely about your business to friendly face and pitches with investors, where they're going to give you some really hard feedback. And the whole idea there is that, you know, we figure out if we're made for each other, and if we are, great, we figure out a long-term structure to align incentives. We're also looking more and more at the regulatory frameworks and how they're developing specifically across the EU, looking at the local or the EU member state level regulatory developments and frameworks that have unfolded, but also looking at the bigger ones coming, obviously, like MiCA, and, you know, most recently in Ireland with the virtual asset service provider program that or registration process that's now required. Biggest idea here is that, you know, loads of experience in traditional financial markets and financial services overall. How to kill three birds with one stone with your regulatory framework is something that I do get quite a lot of joy out of figuring out, along with the folks we're working with. So the next step really is to build an investment syndicate, focused on fintech and digital assets. More to come on that. It's taken a lot longer to activate the ventures part of our corporate title than I expected when I set up this business 5 years ago. But as many folks on this call know, on this webinar know, it's not as easy as it sounds. But we're nearly there.
Thanks a million. So over to Mahesh, who is going to start with our first presentation as well as introducing himself. Thanks, Mahesh. You're on mute still, Mahesh, I'm afraid.
Sorry, it's a pleasure to meet everyone. I'm sorry, I got ahead of myself in getting my presentation sorted, so forgive me. It's great to meet everybody. I just hope everyone is well and safe. It's great to meet my co-panelist, as well as I guess I know Brian now, I think 4 years since Brian was last in Hong Kong. And Brian has taught me a lot about ICOs and about regulation on ICOs. So he's actually pulled me out from where I come from in Hong Kong into the digital space. And before we go into the details, let me just give you a brief introduction to where I come from and where my roots are. So in essence, I come from a place called Hong Kong. I think you can see my screen. If there's anything, shout out, Brian. A place called Hong Kong. We had 99 years of colonial rule, UK colony until July of 1997, where we had been handed back after 100 or 90 years of rule by the British government, that we have been handed back to the Chinese. And in doing so, that we have 50 years to acclimatize to a Chinese rule of law. Our population was 7.5 million compared to Ireland, which is only 4.9 million. But our GDP cap is 48.7, compared to Ireland, which is a significant jump above what Hong Kong is. But we really have a very mixed society, and in that mixed society, we have multiple corporations that have come in to enjoy our tax regime, and really our tax figures, our tax numbers are very, very low. Our tax rates are very low. So the corporate tax 16.5%. Many things are expendable within that. Our personal tax is averaging 15% because there is a threshold to which the government allows you to write off certain income if you have kids, if you're married, if you have housing, if you have dependents, things of that nature. So averaging about 15%. And if we compare it to Ireland, there is the amount of money that flows through Hong Kong. This is a significant savings. Our land space, it's approximately 300 square kilometers. That's close to developed, fully developed. We consist of multiple islands that surround. So we have a beautiful waterway, a harbor, one of the most beautiful harbors in the world, and I hopefully will show that to you. In terms of money, we have 164 licensed banks. 70 of the largest 100 banks exist in Hong Kong. So that allows for capital to move. We have recently engaged and started in the last 3 years, virtual banks and the rise of fintech. Fintech X blockchain, fintech to do with payment gateways, to do with virtual banks, the lack of a need of a teller that sits behind the desk. This is growing and it's getting more and more prominent within this region. We're the 4th largest foreign exchange trading center in the world, behind London, behind UK, New York, Japan, and then us in Hong Kong. So that puts us as a significant player in terms of the capital of money movement throughout the world. Singapore comes in close 5th. In this, there are 96 billionaires of combined wealth of $280 billion. Most of them have come from the property sector. Hong Kong is no longer a manufacturing center. The manufacturing aspect of our boom ended in about towards the late 80s into the change of the service industry in Hong Kong, close to the early 1990s. And today we have very little to virtually zero manufacturing, as we have a neighbor in China, Shenzhen, and north of Shenzhen, we have the immense land of China and the benefit of lower cost labor, as well as land. So we just don't have the land availability in Hong Kong. Here's a little bit of a screenshot of one of the most beautiful harbors in the world by day, as well as night. I'm not sure if any of you have ventured into this side of the world yet, but we welcome you, we invite you. Come over, have a look at this place. It's gorgeous, it's magnificent. We have probably the best bars in Hong Kong. So come and have a drink with me. You're all welcome to come over. Okay. Family history. We are basically, migrants into Hong Kong. And if we look at this, birds and bees can do it, so can we. But I say we're actually migrants, not what other people think that birds and bees do. But we move through the Silk Route from India. We came up through the northern route through Russia and ended up back into China. And with that, my father was actually born in Guangzhou, which is just across the border from Hong Kong. And with that, we faced through the Japanese occupation of the Second World War, which forced us into Hong Kong. Being Indian, we were forced into Hong Kong, and from that, we started to build our trade. And our trade was a real rags to riches story, because we started off as custom tailors. And as custom tailors, we actually received contracts for during the wars, the Korean War as well as the Vietnam War. We received the military and Navy contracts from the British as well as the Americans that helped us to actually build our core portfolio of property. And one of the mandates of our property requirement is all about location, location, location. Within the property segment, hotels are our main forte. We have multiple hotels, totaling 19 hotels across all these various regions, of which the smallest hotel is 96 rooms, the largest is 900 rooms. So we're quite diverse in our portfolio, but again, we started with outsourcing the management to IHG, Intercontinental Hotel Group, Starwood Group, before it was taken over by Marriott. And then we started to build our own brand called the Harry, of which we have our pilot self-managed owned property in London, which has become voted #1 hotel by TripAdvisor just last week. So with that, we're branching and developing more of our hotel aspects. We do have residential plots. So residential meaning we own an asset of which there are multiple units, multiple tenants within, multiple units within the building. So the smallest being a single home, a single unit to of 1,500 square feet to the highest that we have is roughly about 30, a building with 30 units in it. And that's dispersed throughout Hong Kong, UK, and USA. We do have financial in securities brokerage. We do have a variety of consumer trading activities, distribution, of which was really what I ventured into, getting out of the family side of it. So in terms of interest, my interest, the interest of the family as well as mine, the interests are really into investments involved in startups that we've actually invested into water companies. We have technology where we look at deep tech. We have property partnerships, and all of these sit within a sustainable platform, which has to be social, environmental, and has to be able to provide an economic return. The one I like, Brian brought me into, is blockchain, which I think is really the key to all businesses going forward. So let me just give you a little brief history. My family name, I didn't introduce myself. My name is Mahesh Harilela. The family name has been established in Hong Kong since the late 1930s, where we gave up our heritage to India and created a new chapter of life in Hong Kong when we came to occupy Hong Kong. And we decided to join, it wasn't me, it was actually my father and his brothers that decided that to create a new identity, we would join their parents' first names together, Harry and Leela, to become Harilela. And this is really where you will find the uniqueness of who we are, that we are a family that comes from Hong Kong. Anyone you meet globally with this name, you know it's part of our family. We consist of over 110 family members that you'll be able to find with this name. So what's in the name? It's everything. As everybody knows, it explains our heritage. It builds legacy, establishes trust. It creates familiarity, it unites and it bonds. I tell you, I live with a family of 100 people, so I can tell you that does unite and does create bond. And it's bankable. At least, you know, when you talk to a bank or you talk to financial institutes, as long as you know that your word is there. Of course, you do need all the agreements. You do need to go through all the due diligence and compliances, but you know that your word and your name is a value that sits strongly within mindsets. And this is where I come into L.A.B.S, is the newest venture in blockchain, where the purpose of our discussion today is to discuss about property and how it sits on blockchain. So L.A.B.S, the acronym stands for Liquefying Asset-Backed Securities. And this is where my partners in Hong Kong, I sit as the chair of the company, and we sit in trying to bridge the old school of traditional property into a blockchain recorded asset that can then be fractionalized. We know the market size of properties throughout the world is a $227 trillion market. So the potential is huge. And we never pretend that we're going to be the only partner, but we believe that being an entry level into this area to capture the Asian interests and changing the mindset of what is a traditional family investment in property, which is touching ownership, tangible ownership of an asset, to allow for fractional investment. We know that, you know, when you want to buy property, especially in Asia, where property prices today would cost you upwards of about 500,000 US to buy 153 square foot flat, is really coming up with the deposit necessary. Does take 21 years for a new graduate to earn to be able to enter into the property game. The other aspects, it's always subject to bank approval, so you have to show your income statement, and then you know, you still have to come up with your 30 to 50% deposit. So coming up with L.A.B.S was all about fractional investment, trying to break down who, where the potential of the market is to open up the market to a lot more individuals who want to enter, to learn about property, to have the security of a property, to have that tangibility. We said we have to be able to break this into the Asian market by creating a fractional investment tool to which they can own. And all of this sitting on top of the blockchain for us is critical to maintaining that there is a security element in terms of ownership, and it's something that's non-fungible, something that is immutable. It can never change. I believe in sustainability, and with this, it does address my sustainability. And the most important thing is it's a scalable business, because there are so many properties out there, and there's so many different aspects within a property that we could attach ourselves to. We believe we've actually developed a model called G.A.I.N.S model, of which we talk about governance. It's decentralizing our objectives. It's the vetting of projects. As many projects as it comes in, we're able to look at it to understand whether it sits well in the decentralized aspect of this blockchain and tokenization. And with strong leadership on the board, I mentioned I chair the board, so I'm just saying things about myself. But we do have a strong board, and we do have a good team of management that deals with compliance checks and in terms of onboarding a property, as well as the deals that we're offering within the region. We give accessibility to holders of L.A.B.S token, giving them priority, and we give them a certain benefit of a discount if they come in and buy into the asset that we launched. The incentives are discounts and loans that we're working on a loan platform. It could be a peer-to-peer driven type of a loan business aspect of our business that we're able to do that. We encourage our L.A.B.S token holders to come and recommend projects. So they have nomination rights. They can recommend projects, whether it's a hotel or residential, or maybe a parking space, or it could be just a plot of land in an expanding township or community. We have staking for rewards, so reward programs that we're developing that will allow for benefits for people, for token holders who want to continue to maintain their tokens in a staked pool that will provide additional benefits to them. So this is a work in progress, and we're continuing to develop as we move along. But we've raised our funding through an ICO. All our platform has been built to allow for property to be listed. It will come live by the end of June. We have a big announcement coming up in the next 2 weeks in terms of launching our first property, which we allow for tokenized investment. So I leave you with that. I thank you very much. I hope you enjoyed your journey to Hong Kong. I'm here for any questions that you may have, and you have all the panelists here are experts in every legal compliant knowledge of this space better than I do. But if there are any questions you want to ask me, I'm very happy to answer in this 36-degree heat that I'm facing in Hong Kong. So thank you very much. Brian,
I wish we could trade it. I'd say if we could trade 10 degrees of heat into Ireland, everyone would be very happy.
Oh, please do. I'll be very happy. Thank you very much.
Thanks, Mahesh. I think that was a fantastic way to commence. We're looking at sort of, a traditional kind of property investor and family, looking at something that's very new, which is the blockchain. So we already have a couple of questions in, and maybe I'll start off by putting Alex on the spot. The first quick one is, what is the minimum property size that you could tokenize, give or take?
To me, sorry.
Yeah, just ballpark.
So,
I mean, how much?
The thing is, there is nothing such as a minimum size because you can tokenize already like very small property if you want to. The question is from an economic perspective where it makes sense, because you have certain costs involved. So Black Manta, we try not to do deals below 5 million. However, we do deals below 5 million, like the property deal was a 2 million tokenized, or like 2 million were tokenized out of a bigger project. So when considering an STO, I think the size of the project should be, the project should have a certain size in order to make it to consider it, how to say, from a cost perspective, so it makes sense for you as an issuer.
Okay, the next one, maybe I'll ask this to yourself and to Mahesh. Also, was blockchain tokenization sounds complex, lots of technology. Maybe I'm not very good at technology. How much deep technology do I need to execute something like this, or as an issuer or investor?
Well, if I take this, I'm actually one of the worst people with this type of technology, but for me to enter into this activity is actually proven to be much easier than needed. It's a question of having your interest in blockchain, and the second is to be able to know how to buy and trade tokens. And with that, you just come into our entity or whatever the entities are to be able to activate your interest. The question is, I think what's really most important is to ensure that the property to which you wish to activate with has been established in terms of the amount of percentage that's available for sale. I think that's very, very important to look at. Anyone can come and activate, and they can buy a fraction. If you want to buy 0.001%, it's not difficult to be able to activate and achieve. And it's just a question of getting into the platform, the correct platform to be able to address that.
Alex, what do you see?
Yes. So just a question came up. I'm not sure if you to Mahesh actually. What are your thoughts on tokenizing LP shares of real estate investment funds? Are you thinking about doing this? Why and why not?
We're actually working on a couple of programs at the moment. We're not looking at the LP shares at the moment. Sorry, let me rephrase this. We've had to break this down into two structures. The first is the fund unit of the pool that we create that can go out and acquire the assets. We're trying to create, first and foremost, a comfort level with interest to participate in tokenization of a real estate product. So we're piloting and highlighting our own investment through a fund structure that will create the trust to say that we have actual ownership and control before we take it to the next step in offering it out in terms of the token. So in the first concept, this has to be done in two stages. The real estate investment fund first, and then the tokenization of the asset thereafter. So I hope that answers the question, because it actually deals with the real estate itself, but the fund structure has to be clean and pure in our first offer.
So like we as Black Manta, we currently have two tokenized real estate funds. Or we are working on two tokenized real estate funds already. One is in Luxembourg, where LP shares are tokenized, and the other one is in the States. So they're fully tokenized already. And the idea is that normally if you invest in a real estate fund, your investment is blocked for, I don't know, 6, 8 or more years if it's not a listed fund. And the idea with tokenized LP shares is it's transferable all the time. And there are a few projects already going on. As I said, 2 are already on our investment page. So everyone feel free to have a look. It's Liberty Real Estate Fund out of Chicago, and we invest Premium Real Estate Fund out of Luxembourg.
Okay, so in the same sort of theme of looking at these new things coming in, I know that you get phone calls probably every single day, and property is just a huge part of it. So can you maybe give some background about where these property owners are coming from? Who are they? What countries they're from? Who are looking to avail of services to have their properties tokenized, just to give it a taste of the market.
Or was that to me, Brian?
No, well, it was to Alex.
Oh, sorry. So it said Andrew.
Yeah.
Apologies.
So just, well, we can ask you, and you can start off, because I presume you, as a legal practice, you're also getting inquiries in. Yeah. So if it's, what I'm trying to do is get a taste from where the
sure. I'll let Alex go first.
Okay.
So no, basically, we get requests on a daily basis. Not all property, but I'd say a majority of them is from property developers or owners, and they are all over the world. So we were looking into a project in Bangladesh a few months ago. We had projects in Japan which approached us. We focus on the European Union, but through partners, we are also able to work on projects in the US, where we have some clients already, and also certain Asian countries like Hong Kong or Singapore. But the demand is, I would say, global. So
I'd say, Mahesh, you're the same. You see people knocking on your door from virtually every geography that there is.
Yeah, so we're at the moment staying Asia focused on this, and the categories that we look at, the three primary categories. One is residential, number two commercial, number three is hotels. There is still a lot of companies that don't understand the need for tokenization, and trying to overcome their lack of knowledge, I would say, or overcome the barrier to understanding what is blockchain. Is a step that Asia, although it has such a large volume of traders, does not understand about the asset stage aspect of it. So we're in our team. We have property brokers, we have property magnates, we have property advisors, we have the financial team that comes in to look at viability of the project. So in understanding what it is, we have maybe, as we're growing, I would say we have close to about 80 property proposals received so far in 3 months.
It doesn't surprise me.
Yeah.
If we compared lists, there'd be probably some crossover.
I'm sure.
Andrew, just you're probably also getting things in, but also you're probably also seeing, property is so multifaceted. It's not just the country that it's in; it's debt, it's equity, it's some sort of maybe token that has some income rights or some hybrid of all of the above. So maybe what sort of things are you seeing coming across your desk when it comes to inquiries? And
yeah,
who's on?
So I guess there's a few different things. I mean, at a general high level, we're seeing lots, and really just at a blockchain level initially, we're seeing lots of inquiries from companies, established businesses, perhaps in certain jurisdictions that aren't quite as strict on the regulation as maybe Ireland might be. So they might be established in other jurisdictions around the world. They're looking for a foothold in Europe. A lot of them are looking at Dublin, Germany, Berlin a lot of the time, and also Amsterdam as well, seem to be the big three when people are looking to be in one of the more established jurisdictions. On the tokenization side of things, tokenization in Ireland is probably, and not even just in a blockchain sense, in terms of any inquiries that I come across, tokenization is probably the most frequent inquiry we have generally. That includes venture capital, private equity, investment, anything. In terms of the stuff that we see, me and my team, that's probably what we see the most of. And real estate, as is always the way, is high up the list, followed by whiskey as well, actually. Two things close to the hearts of the Irish people.
In Ireland is doing whiskey events.
Exactly. Yeah, exactly. It makes perfect sense. So yeah, we're certainly seeing a lot of that.
Okay, maybe just not to be ignoring Pete and Peter. So maybe I could ask, Peter, you're an entrepreneur, as you described. Who began in tech, have a deep kind of knowledge in tech, and came across the whole concept of tokenization. You've done one, you're going to do another. Can you maybe just explain from this perspective of property owner why you think this is property tokenization is such a good idea?
Well, in my personal case, it's because I'm interested in deep tech, as I always did it in my whole life. On the other side, I started the real estate business, and I saw how I call it the old world is working. And it's a very inefficient world, It's to get an investment on your real estate property. It takes a bank, it takes a notary, it takes a lawyer, it takes a tax advisor, it takes everything, you know, and all these people are working like in an analog way, you know, and I got the impression there is some efficiency to be made in this business. And then that's where the crypto business came along, and the security token business. But the big thing was the regulation, because you can't do a security token offering just like some other crypto project, which some programmer puts just online and that's it. So nobody cares for regulation. So that's where Black Manta came along, because they did the whole thing with BaFin in Germany. They got the license for Europe, so they're allowed and endorsed to do it. And that's where things happened, where I started to do the first security token offering last year in Berlin.
Fantastic. And you know, I think you're right in saying, my view would be that the sort of the Moon and Lambo investors of of crypto land are not the same type of people who we're talking about here. We've people looking at real money investments, and I suppose, Pete, you're sitting across a number of, you know, different you know, digital assets businesses, and you know, if you're looking at you know, a traditional property investor, you know, why would they look at something tokenized? What's better in a digital instrument than the traditional way?
Yeah, you know, I'm kind of thinking about this in terms of, you know, three different factors. One being the advantages, two being the risks, and three, liquidity, right? And that I think liquidity being one of the advantages, but I think it's worth probably calling it out separately. In that, if you think about, you know, what are traditional property investors thinking about themselves, it depends on what type of investor they are, right? And if we're talking mainly about individual investors right now, but where I'm kind of coming at it as well is from the institutional investment framework. But looking at individual investors, the whole idea of one with fractionalization, right? And once you can make these bigger ticket investments available to a wider market, right, through breaking down the, you know, the ticket size and turning that into a completely digital instrument, you just open up so many more opportunities, right? Borrowing from the whole crowdfunding space, you've got this opportunity really to create these fans, right? One of the biggest successes out there in crowdfunding, companies like Monzo, Brewdog, right? They all gave these benefits to those that invested early, right? And when you have a product that is appealing from a B2C perspective, you do have that opportunity, obviously, to create those fans, right? And that when it comes to, you know, about a neighborhood, you know, about a locality, you know, about a region, and you know where the property, like you said, Mahesh, location, right? You want to take a bet on that, or not even take a bet on that, take a well-founded investment thesis into this, right? And say, I'm going to make some, you know, some investments here. And you can take that same approach that people are taking in the crowdfunding side, that you know, to create this, you know, this interesting context. The collateral side of it as well. Once you have a digital asset that is then can be held and used as collateral from a lending perspective to invest in other projects, I think that's really interesting. And then the exchange on the other side of it, which I'll get into in a minute. But I think, though, you know, some of the key advantages, if you're looking at the risks, right, you're still going to have all the same parties to a transaction. And, you know, it's just that a tokenization platform and an exchange, you've got a framework that enables more transparency, more automation. I think, you know, you are going to have some risks, obviously, with the positioning of a platform, do your DD as an individual investor, but you're saying that same thing to an investment, to a institutional investor, right, who has a fiduciary responsibility for the money that they're managing for other parties. I think depending upon the market that you're selling into as well, and where you're trying to raise money from, as a real estate project, you're going to have different legal and tax considerations, different perhaps SPV structures behind this. You got to be mindful of that. But again, this is a status quo for institutional investors that are investing millions and billions and trillions into the space, right? So this is, you know, it's nothing new. It's just that when you bring this into the digital asset space, how you mitigate those risks obviously changes, right? And then, just quickly from a liquidity standpoint, thinking about this from an institutional investor standpoint, man, what digital assets do to how institutional investors look after this space is just night and day, right? All of that, and I, for years and years and years myself in the asset management space, and seeing how much activity and inefficiencies there are in after that investment decision is made in the real estate space, with all the documentation, all the paperwork, all the different parties signing transactions. It is really, really heavy. And being able to bring this type of efficiency to the market, one, means that it's not just how you operate the asset, it's how you make it available for sale afterwards, right? And that secondary market and opening that up. And, bringing those other parties to the market. Who are they going to be? Are they the high net worths? Are they everyday investors, the wealth affluent level? Are they the institutions, right? Seeing this holy grail, I think, as we talked about the LP share side of it, is where you can have a tokenized real estate investment trust or real estate investment fund investing in tokenized real estate projects. That for me is the nirvana.
Let's get to nirvana this year, Pete.
Absolutely. Quickly.
So I do want to talk about liquidity more because I think it is very important, but maybe we leave that to the very last discussion. And maybe now what we can do, we've kind of taken a very broad look at, traditional property investors, what it means to tokenize property, and some of the very high level stuff around what that is. But I'd like to maybe now pass over to our second panel session, which we'll get down a little bit deeper, and we'll go over to Alex and Peter now, and we'll look at we'll have a look at the very first transaction, which was Tigris, and which they can tell you about. And I still think it's amazing to say, there was last year a cross-border retail security token sold in Europe. And anyway, the story's with the guys, so I'll hand over to Alex and Peter now.
Thank you, Brian. Just share my screen. So I think we have heard a bit about challenges with traditional real estate investments so far, but let me just recap why tokenization makes sense in general. So what options do we have today to invest in real estate? It's a direct investment. It's investment in a real estate fund, listed or non-listed, or for smaller tickets, you can also invest in real estate crowdfunding projects. All these investment types have a different structure. Crowdfunding is most of the times, I would say, a subordinated loan, so it's not equity. You do not participate in the value increase on long term. Direct investments are, as Mahesh already pointed out, capital intense. So you need so if you want to buy a flat or a townhouse or a hotel, whatever, you need money. So the idea is with tokenization to address these challenges, which comes with real estate investments, like high entry thresholds for an investment. Normally, as a small or normal person, you wouldn't invest cross-border because you're not familiar with the market, and you wouldn't buy, I don't know, a flat or a townhouse in Spain if you're Austrian, unless you have so much money that it's like your holiday house whatsoever. You have a slow and complicated process of ownership transfer, at least in Europe and in a lot of other regions. You have, like, for example, in Central Europe, you have to go to the notary. There are a lot of costs involved, like they say, up to 10% in addition to the purchasing price. You have to pay for the process itself. These are the high transaction costs. Yeah, and you have a lack of price transparency. So the idea is with tokenization of real estate to open this asset class of real estate to a new class of investors, because you can tokenize a square meter and sell a square meter of a townhouse, and people can participate in the monthly earnings or in the capital increase of this property without without the need to invest hundreds of thousands of dollars. And with Tigris and Peter Augustin, we realized the first cross-border retail STO last year in Germany, where we addressed these challenges. And just to give you a kind of insight how this deal looked like from deal structuring, it was a development project. So Peter and his company purchased the property. Now it's in a developing phase, and it will be sold after the end of the developing phase. Out of a 11 million total project volume, so it was Peter, please interrupt me if I'm saying something wrong or if you want to add something. It was a townhouse in a very central Berlin area. Total project volume 11 million, whereas 2 million were tokenized. And the idea was, for the issuer, I can get back my equity investment via tokenizing participation rights. So either the issuer can take out his equity risk, or he can starting a new project, or in order to have a bigger project in the beginning. And on the other side, we wanted to retail small ticket investors to be able to participate in the real estate market in Berlin. Investment ticket size was 500 plus. The term was 3 to 5 years. So I think up to 3 years developing and construction phase, and then 1 to 2 years of the selling process. And all the token holders get a 20% of the overall profit share. Expected IRR was 8%, not considering the value increase of the property over these 5 years. And as a goodie, all investors which invested a minimum of 25K got a preemption right on the property. So I'm not sure how familiar with the Berlin real estate market, but it's pretty hard to get, to buy property there is not the easiest thing in good locations. But probably Peter can tell a bit more about this project. The only thing was, like, we started I think in April or May. It was the second week of the lockdown where we got the BaFin approval. So we had a bit of uncertainty in the market. But in the end, the project was finished end of June. And as Peter said, it was we were pretty happy how we did it. And in particular, the structure we took and all of the process with the regulator in Germany, we had a lot of learnings. And this is kind of our blue pause for all other projects, as it worked out very good. We will have another project Peter can tell a bit about end of the summer, also in Berlin. So probably I hand over to Peter. You can tell us a bit more about the projects.
Yes, the next project is in the purchase phase right now. It's in Berlin Mitte. It's pretty downtown, although there are trees and everything around. But that's Berlin, you know. It's a pretty green city, and the property is at a total investment at around 8 to 9 million euros, and it's planned to get the roof to get the apartments in there, and do some refurbishment in the other apartments in the building, and sell off the apartments to individuals after 5 to 6 year period. And security token offering is planned to start in Q3 of this year. So looking forward to do it together with Black Manta again.
Yeah, so the uniqueness of this project, at least last year with the first one, was that it was the first cross-border retail STO. So the offering was in Germany and Austria. where we also notified the regulator. However, we had also investors from other European countries. And with this, I'd say equity structure, because you're participating in the value increase, it was a new form of investments possible for an investor class which wasn't able to invest in such properties before.
So, Alex, maybe just to get into, maybe I don't want to go too deep, but there's probably a lot of people on here, just very curious about how it all works from a regulatory perspective. So maybe just to get into some of the nuts and bolts about this specifically, but more generally, if you're looking at the regulatory oversight required to get this done, with Tigris, there was a sign-off required. So it was done for a particular size for a particular reason. Maybe you can just give us a bit of color on the thresholds, because it's basically European under MiFID. Then the second thing was that, there was a sign-off required in Germany from the regulator. There was a notification required in Austria. So maybe just give us an idea of those thresholds and those sort of filings and things that need to be done to affect this.
Yeah, so I mean, Andrew can also tell us a bit about this, but we have the European Union, but however, it's still a fragmented market. So for example, we have the prospectus regulation, which allows us to issue securities without publishing a prospectus if the total investment volume is below 8 million. However, so this is on a general European level, each European country has their own thresholds. In Germany, it's 8 million, so they have the highest threshold. In Austria, it's 2 million. And that's why we said, okay, and it was like the right size for Tigris. We said, okay, we don't want to exceed the 2 million threshold because we want to also offer these securities in Austria without publishing a prospectus. Why do I need a prospectus? Because it's a regulated financial product, a security. So the process with however, we needed to get the approval from BaFin because even though you don't need a prospectus, it's so-called an information paper, which needs to go through the process. It took us 3 months, actually. With the regulator, they were very cooperative, but they had many questions, mostly tech-related. And we needed to put in all the different kind of risk factors in this information sheets for investors. But I think to have this process done once, so the second will be much more easier, I hope at least. What was the second question, Brian?
No, if we can wander on, and if Andrew wants to chime in, he can. But what I see here, right, is that if you have a deal, I don't know, let's say it's 100 million, you can do a small chunk for retail, 2, 3, 4, 5 million, depending on the geographies that you're looking at and everything else, and then you can sell the remainder of it to more traditional, we call it professional and institutional investors. So that if when you're looking at a tokenization, you can split it into two, and if you do wish to have that retail aspect, this is something that's doable and has been executed before.
The ideas of the second project, is exactly like this. We will do second Berlin project retail again for Germany and Austria with this 2 million threshold, but open to professional investors all over Europe at least. Because I think, and that's our anticipation, that a retail investor will most likely invest locally, where he can drive by this property and see, yes, it's really there. Whereas for professional investors, they like Mahesh, they're investing globally. They have another investment vision. So that's why we will split this up in the second offering, exactly like you said.
So of course, sitting here in Ireland, we wish to do these sort of things. So Andrew, when are we going to do our first deal?
It's coming. We're warming up. Yeah, we're warming up. I think it's interesting, actually. One of the things that Alex said, I guess there's a common misconception. We talk a lot about passporting rights, don't we, in Europe, but there is individual rules that apply in each jurisdiction, which you of course still need to be mindful of. I mean, don't get me wrong, passporting is an amazing thing. If you think how many jurisdictions you can carry across the services to, it's fantastic, but you still have to be mindful of local rules and regulations.
Yeah, and I was just going to add there as well that when again, you know, when I talk about crowdfunding, I'm not referring to this whole space as crowdfunding, but there is a very strong element of crowdfunding that I love in this space, which, you know, like you just said, being able to have that small pocket of capital raised from an individual investor market is something that, you know, when you look at any crowdfunding raise where you've got, say, 500K being raised, what not a lot of folks know is that the first 300 to 350K come from bigger ticket investors, right? And all that actually gets funded by the crowd is the last 100 to 150, sometimes even the last 50K, right? So there is some good models in the past. Now we're talking about in this space raising not 500K, but, you know, 50 million, 100 million. But the bigger ticket institutional investors in the property market are absolutely writing checks that big, right? And then filling it out with that smaller component. I think there's a really strong element here of bringing things from the individual market, from the consumer market, and enriching the overall proposition for institutions out of that. To operate an asset digitally, you need to be, I mean, it's so data intensive. The reuse of that data at the institutional level is something that's really interesting to me as well. And I think it's something we can talk about later on.